To our 8th monthly webinar for this year. We are looking for a month of August. Before looking into the details, let's start with the speaker by August. There are two speakers today. First one is Thirada Thaninyong. She has been an equity strategist for Philip Securities Thailand since 2004, employing a top-down investment approach to look for an appropriate investment theme at the right time and updating both institutional and individual investors about the outlook for the Thai stock market. She holds a MBA from Chulalongkorn University, Thailand. The second speaker is Rasada Thavisanskull. She joins Philip Securities Thailand since 1996 as an equity strategist analyst covering Thai listed companies in ICT, healthcare, and energy sectors. She holds a bachelor degree in business education from Chulalongkorn University, Thailand, and has Master of Science in Business Administration from California University of Pennsylvania, USA. Okay, let's start the presentation for the monthly outlook and stock pick for August 2014. For Thai stock markets, it seems that the uptrend of Thai stock markets has just entered to the consolidation periods for a couple weeks since the beginning of August. There was no surprise for the pullback after the index went through a long path of upside after the military coup on May and reached its forward PE peaks above 15 times. So what's next from now? We wait more on external uncertainties to dictate market sentiments for this month, particularly on geopolitical concerns. The violence in the Middle East, especially in Iraq, and the tensions between Russia and Western alliance on Russia's interventions in Ukraine as a result of economic sanctions. That would be the major factor for the month to dictate the sentiments. What about the internal factors in Thailand? The progress in NCPO implementations of both political and economic policy would remain the key domestic factors to watch out this month. On the political front, the focus would be on the establishment of the National Reform Council as well as the appointments of the Prime Minister and the Cabinet. That we will see some progress in the second half of this month with the National Legislative Assembly or NLC will propose the name of the Prime Minister and also the Cabinet, and then we'll see some progress. And on the economic side, the market attention would mostly be on the progress in energy and tax reform plans, as well as other economic stimulus measures. For Thai stock markets, it is likely to continue in the consolidation period in the month of August, even though some rebound is likely along the way. There seems to be a lack of strong catalyst to sustain the rally, especially after ending of the earnings seasons by the mid of August, which would be the end of this week. Historically, statistics suggest that August is traditionally not the best month of the years for Thai equities. Actually, it's quite flat as shown in the chart. The statistics show around 60% odds of higher finish in August from July for the SET index in 6 out of the last 10 years, while the average market gains are only 0.37%. However, we believe the market downside could be tempered by the optimism about the looming appointment of the new Prime Minister and Cabinet Ministers, as well as economic recovery prospects by the end of this year as well as into the early of next year. So for the set index PE ratio, it is pulling back towards the mean level equities to that around here to the 1470 points in the corrections from its recent top around +2 standard deviation level around here, which similar to a 5% corrections from the peak of the cycle around 50 points. Therefore, the support for the set index is pegged at 1470 points and the resistance at 1550 points for the month of August, we think. And our top picks for the month of August include Advance, JFPT and K-Bank, which I will pass it on to Lasada to give you more details about each pick.
The first one is Advanced Info Service or AIS. AIS is the largest mobile operator in Thailand with a market share of around 41-42%. For the second quarter of the year, the net profit is 8,475.30 million, down year-on-year and Q-on-Q because on the second quarter is the low season and because of the high competition dealing among the competitors and slowing economic conditions. Following results announcements, Advance declared an interim dividend of 6.04 per share on the for the first half of the year. And the first half of the year, the net profit clocked in at 17,955.85 million, down 6.07 year-on-year. Recently, the share of the Advance took a heavy beating after the NCPO ordered the NBTC to delay the auction of the license for the fourth generation of 4G mobile phone spectrum for another year, and intense competition in the mobile phone market ruined earning fears. In our view, we see the current weakness as a buying opportunities on expectation of earning improvement on the second half of the year due to the high seasonalities, various political clarities, and sustained strong growth in demand for the non-voice or data service. Full-year dividend is estimated around 12.38 per share, implying a yield of roughly 6% for the full year's basis. We estimate Advance will achieve net profit of 38.7 million, up 6.8% year-on-year, strong margin improvement thanks to the regulatory cost saving following the acceleration pace of the migration from concession-based 2G to license-based 3G service. The second one is the JFPT. JFPT is a fully vertical integrated livestock and aquaculture company. It is involved in breeding, feed production, and processed meat for domestic sales and exports. Europe is its biggest export market, around 51% of the total exports, followed by Japan at 48% and others at 1%. It also has subsidiaries that are engaged in the production and distribution of animal feed for domestic sales. Food business is in the biggest revenue contribution, around 46% of total revenue, followed by feed business around 31% and farm business around 23%. On Friday, it just announced the earning result for the second quarters, which on the second quarter the net profit is 481 million, up 58% year-on-year and 13% Q-on-Q. higher than our estimated. And for the earning outlook, we expect the second half, in our view, should continue to get a boost from the traditional peak sales season and sustained high level of selling price. In our view, external headwind from the U.S. downgrade of Thailand to Tier 3 in 2014, trafficking in persons TIP report and the EU move to the curtail its diplomatic ties with Thailand are unlikely to deal a blow to GFPT sales compared to its peer, as Thailand does not export chicken to the US market, while poultry exports to EU are under the quota system. From our view, we remain upbeat on the earnings outlook for GFP3, driven by huge sales volume and sustained high level of ASP. There is also scope for McKee Food, an affiliate of GFPT, to receive more order on potential windfall from McDonald's cancellation of its order with a Chinese supplier, one of its 4 suppliers from McDonald's in Japan. McKee Food is one of the suppliers for McDonald's in Japan. We upgrade GFPT to buy with a fair value of 18.20 per share. The last one is K-Bank or Kasikorn Bank. The bank's strength lies in its well-diversified revenue profile with less reliance on interest-based income. Note that its interest-based income accounts for half of its total income, and non-interest income makes up the remaining half compared to the industry average ratio 64 to 36%. Lower dependence on its revenue base, its income makes the bank's revenue less volatile in times of a slowdown in lending. Even though SME loans, which are highly sensitive to economic swings, account for the biggest slice of the bank's loan portfolio, the bank could, however, manage to keep risks well under control. Its NPL at end second quarter of the year could remain at the same level seen at the end of last year at 2.1%, below the industry average of 3%. As high-yield SME loans make up the biggest share of the bank's loan portfolio, its net interest margin or NIM was the highest among big banks at 3.5%, against SCB as 3.1%, KTB as 2.8%, and BBL as 2.2%. We expect the bank to achieve this year net profit of 44 million, up 7.2% year-on-year. Our forecast also puts the bank's this year dividend around 3.75 per share, implying a yield of roughly 1.8%. We rate accumulated for K-Bank with a fair value of 246 baht per share. This will be end of this session. Do you have any questions?
Okay, Stephen, I have no more questions. So I would like to end the presentation here, and thank you for your attentions, and see you next month. Thank you.